Tesla's earnings really helped a lot as well. And I want to go through some of the charts and then go over one of the trades that we had. I think that was about 2 weeks ago when we were together. So it's been a little bit of some time. Let me get back to my screen here. So looking at the SPX, the SPX right now is, we have a gap. You could see the shaded area on my Thinkorswim chart. We have a gap. You can easily see we've made no attempt whatsoever to fill that gap. We're above the 20 right here, looking very strong. Our momentum's a little weak, but you can see that even though it's weak, it's kind of staying in that 100 range. This is very similar to the CCI, so you can take a look at that. If you have a momentum indicator on your chart, that's great. If you don't, you might want to put it on. And the reason is because momentum actually drives price. So when we look at price action, we're really looking for momentum to break above basically that zero line. And when it doesn't, if it doesn't break above that zero line, right, then you just don't have enough strong momentum to take you somewhere. So typically speaking, people are usually buying calls and puts. And with that type of trade vehicle, you need some momentum to get you to the finish line. So think about that the next time you're thinking about, hey, what kind of trade vehicles should I get in? Is this the environment that's trending where you're going to want to get into a straight call or a put? If it is, then awesome. But just make sure you got some momentum behind you. I kind of use the analogy of surfing. I don't know if anybody out there are surfers, but you wake up in the morning really early, dark 30. You're pouring yourself some coffee. You're listening to the surf report. And then you finally get yourself in all your gear, right? Which is very synonymous to all the homework that we do in trading. And then you get your wetsuit on, you got to paddle all the way out there. You're using all your might. You get out there, it's freezing water. And then what do? You just sit on your board and you wait. And that's kind of what we've been doing. We've been kind of consolidating for a while now. We're breaking trend, getting back into our range, breaking trend, getting back into our range. And so finally now we've actually broke up. We broke up, meaning that we're trending bullish and we're staying bullish for right now. Could that change? Absolutely. But I think, what I was using for the trade vehicle aspect was, are you going to take a long board or a short board? Do you want to go fast? Is this a market where it's going to go sideways for a long period of time and then it's going to get to your target? If you're using some sort of trade vehicle like a debit spread or a credit spread, these are probably a little bit better for you to use versus like a straight call or a straight put when we have a lot of sideways action. So think about that. If you're going directional, you need that momentum. You want to be looking at a momentum indicator on your chart. Why? Because momentum drives price. Now, granted, I'm on a 5-minute chart, so this is typically like day trading, right? So we're just looking for right now, what's that momentum look like? Where are we going? What are we going to be doing? So the last time that we talked was 2 weeks ago. We actually were in a trade on Wells Fargo. And the reason why we took that trade was because, well, that was interesting. What just happened to my chart here? That was because we had a lot of option flow. Let me get out of here really quick. Let's see if I can get my chart set up. There we go. We had a lot of option flow into unusual whale activity. And so when I saw that Wells Fargo, let's see, this was 2 weeks ago, we were right here that morning and we had popped above. It had gotten a good earnings. That's right. It had gotten a good earnings report. And I said, you know what, this could carry us through for another week or two. And that's exactly what happened to Wells Fargo. We got over, I think it was like 120% on the debit spread, was able to keep that debit spread just going. And that ended up being good. I think we also took, I want to say it was Tesla. I'm sorry, but it was a couple weeks ago. I had forgotten what we took. And that ended up being a dud. So we ended up just cutting that one. But Wells Fargo was a winner. And because we use the risk profile, right? So you're risking approximately 1 to 3% of your portfolio value in a certain ticker. Now, this is kind of like industry standard, right? You could look this up and recognize this. This isn't financial advice. But if you're looking at your account and you're saying, okay, I'm risking 1 to 3% of my portfolio, and let's just say you say 3%. And when you buy a Tesla debit spreads, as an example, they may be more expensive than, let's say, United Airlines. And so maybe for Tesla, you're only buying, 5 debit spreads, as an example. But for United Airlines, because it's a cheaper option, you can actually buy, let's say, 15, basing that same equation on your portfolio. And what ends up happening is, if Tesla's ends up being a loser, but United Airlines, as an example, ends up being a winner, you end up making back what you lost on Tesla plus. And that's really what you want to try to do. Now, what happens if you lose on both of them? Hey, look, you're only using 1 to 3% of your portfolio value. So even if you lost on both of your positions, it's not going to take you out of the game. So just think about that as you start moving forward, because I recognize that a lot of people do things in groups. They'll say 2 contracts here, 2 contracts here, 2 contracts here, 2 contracts here, or it might be shares. So think about that the next time you do it. And I suggest that you do this on a simulation platform. Just start simulating. You don't have to change what you're doing right now. Do what you do, but think about this idea, put it on a simulation platform as you're buying your regular positions, and say, you know what, I'm going to try that. And then you're going to utilize that theory going forward until you can say, you know what, this thesis makes sense to me. I actually like this way of doing it. I could see the progress that I'm making in my account better than the way that I was doing it before. Then you can make the change once you gain confidence in that new perspective. Okay. Because I know that, everybody's got a perspective, right? It's very subjective. So as we look at Wells Fargo, we did have a nice pump, great play here. Tesla's been chopping around. Let's take a look at Tesla. Tesla's been chopping around for quite a while, got its earnings. And this is kind of where we were at. We kind of made a high. We were going lower. And then boom, right? Look at how low Tesla was actually trading um, before its earnings. And now we have it to where it's actually coming up here to do a double top. Now we're at resistance here on a daily chart, right? It's going to be 1 to 2 things that's going to happen. We're already getting close to the 200 level in momentum. Could this continue? Oftentimes when Tesla has a big move, it does continue. But I have to tell you that we are at resistance. And it looks like we've been here before, haven't we? We've been here before. Is this the time where it's going to break out? We'll soon find out. I actually think that it's got enough momentum to do that. And actually possibly drift, right? Possibly drift because we're at resistance. This is going to actually act as a fake out zone. So we could be at this resistance level for quite a while as it builds its momentum to get up and over that. So with that in mind, I think a debit spread would be perfect for a play like this. So we'll check back later. Let's take a look at the indices right now and see what we got going. So we took a quick look at SPY. SPY actually finally doing something. is my thought process here. So finally SPY is doing something, and you can see that yesterday, boy, just chopped around. What was this? This was Thursday. This was Wednesday. And so finally, where are we back? We actually filled that gap from a couple days ago. And is that going to act as a resistance? As I'm looking at that, it's acting as resistance right now as we speak. But what I'd like to see is, you see how momentum has dropped down? It's dropping down and it's sloping. And to me, this is like a consolidation area where it's just going to create its momentum again, kind of like a wave. So I use those analogies quite a bit. So as the wave just continues down, you can see that if it continues down but stays above that 100 level, it can get its energy to go to the next level. That's what I'm looking for here, as the internals look strong right now on a 15-minute. And as I look at an hourly chart, we're coming to a previous couple day before double top. Did we actually break that top? really need to break above this 585 level. I'd say the 585 level is really the level that we need to break to get up to our last pivot high on an hourly chart, which is that 586. We can clear 586, then we're making a new high. That's just the way it goes. But will we be able to do it? On a weekly level, this was actually point of control, this 582 area. Now that we're above it, we could see higher prices, but it doesn't mean that it's going to be smooth sailing. As I look at a 4-hour chart, I can see that there's this trend line coming up here that we've had for many, many days. And it looks like we popped below and we're right there. Unfortunately, that is an identifiable fake out zone, which means that it could just kind of stay here for several days before it starts to do something. We've already been there before. We know what that looks like. So don't get overzealous thinking, oh, we broke out today. We finally got some momentum in the market. The market's changed. Not technically, but I do like on a 4-hour, we just broke above the zero line on momentum. So we could get some force. And I'm looking really, I really want some force above that 100 line. So we'll have to see how the rest of the day goes. But SPY looking great today, up $3.99 so far. Let's take a look at the QQQs. QQQs getting a pump as well today. And really looking, let's see, we're right there at resistance as well. This is a consolidation zone, this yellow band that it's been in for several, probably almost 2 weeks, really kind of just consolidating in this area. So what happens during consolidation? Well, you either get accumulation or distribution. We either break out or we break down. So right now we're looking at 499, let's just say. It looks like it wants to break out, actually. I mean, it's right there. It's kind of like making a decision right there. I really like this area. Let's see. Let's make it 499. Boy, it's right there. I would have to say that it's on its way, and I like momentum here. It's on its way to continue. I don't know. This was the weekly high, expected move, weekly high. And you can see that we almost made the weekly low, but the weekly high here is at 504. Could this keep on going? I think the Qs have moved quite a bit, but it looks like we could see some continuation next week. And that's what I'm looking for. Looks like we actually broke above its last pivot high on 1 hour, and it looks like it could get to 504. But probably this area again, whenever you see on any chart that the candle's actually laying on top of a support or resistance zone, it's a fake out area. If you can think about it like that, it will help you not make your decision so quick. So just think about that for a little bit, and it'll help you think about what kind of trade vehicle should I get into? Should I get into something where we might chop around in this area for a little bit? So think about that while you're thinking about, it's sitting on top of our last pivot high. You could see this 1 hourly chart still had a wick that's down below it. I'd really like to see an independent candle above this area or below this area to give us our direction going further. So that's what you want in a fake out zone, is a confirmation candle. It could help you remove about 60% of your fake outs. If you're one of those people that really like to, kind of front run, right? Front run things, then you might take a look at this and say, hey, this looks great. We broke out of our pre-market high on the hourly. We came back to retest it, and now we're staying above it. And as long as you do, you're going right up to the 504 area. Maybe not today. We're already up $7. My gosh, looks great. What is the other ETFs doing, like DIA? Do we have sector rotation happening right now? So we have DIA not really doing anything here on an hourly chart. If I look at it daily, you can see that we hit, last week we actually broke below its expected move of its weekly low, and we're still there. Like, we haven't really done anything here. It needs to stay above 423.81. Let's make it 424. Needs to stay above 424 to possibly make a move next week to go higher. So right now it kind of hit a low, did a little bit of a bounce, but consolidating in this area until it figures out what it wants to do. It did do a nice, by the way, on a daily, it did a nice test of the 20 here. So we could get some momentum. You can see how this is a little shallow. It hasn't broken through that 100 level. I like to look at that and say, oh, is that a true bottom, right? Is that a true bottom? And now we're heading up. We'll have to see. But I am liking that momentum is going up on a daily. On a 15, not so good. Looks like we did that gap fill, did a topping pattern, came right down on a 15. On a 1 hour, this looks like um, it looks like we bottomed out here. Definitely bearish, right? We flagged, and now we're coming up to test the 20. 20 is acting like resistance. I don't know if it has enough juice to go. That big engulfing red candle, I don't think so. So DIA not looking very good there. And then we have IWM. Let's take a look at that really quick. So IWM, you know, was doing good until this last hour. Let's take a look at the 15 topping pattern coming back down. We do have this gap below. If you like gap fills, if we break below this, let's call it 220.37, you can automate that. Make it 220. We break below 220 and we're going to go down to 219.70 here to at least fill the gap. And then that should act as support. If it doesn't, we're going to go down and visit our previous pivot low on a 15-minute chart. We got some selling right now in the market. This is the NYSE, the entire NYSE. So you just kind of get a feel of where we're at, right? We're selling right now. So let's take a look at SPY one more time and see how we're doing on SPY. Topping pattern on SPY right at 10:15 Eastern Standard Time. How interesting, because 10:15. So what is 10:15? Is that an important number every morning? It kind of is if you don't know. So 10:15 is the mid-morning reversal, is what they call it. You could Google this stuff, people. So mid-morning reversal happens at 10:15 every day, and it lasts until about 10:30. Is that good to know if you were in profits here earlier today? Yes, it is. I used to have to put a little note on my computer to remind me. Maybe you might have to do that too. So typically speaking, mid-morning reversals at 10:15, and then we get a pullback, and that's exactly what we're doing. And so we have about 8 more minutes until this pullback, and then we get to see if we actually have a continuation of our pattern that happened this morning. Because, your pre-market levels, right? The pre-market, let me get that on my screen really quick. So if I go to here, equities, show extended hours. So I want to see the extended hours. And the reason is, if you're not acquainted with this, is that your extended hours of trading is actually your day's trading range. This is for any stock, any ETF. Think about that. So if, I want to know what my low is, and I want to know what my pre-market high is, because that's my trading range. So if I hit my pre-market high, as an example, and then I start to retreat from that, and price action starts to retreat from that, what's that saying to you? Well, it's saying that we're in range. We're not really trending, right? Bullish. But if we break out of our pre-market high or our pre-market low, then we're trending. We have a trending market. You're either trending bullish or you're trending bearish. So today we're trending bullish. We broke out of our pre-market levels. So we're not range trading today. And now we are trending bullish. So we made a higher high, basically, right? And so now we made a high and we made a low. It's still working itself out on a 15-minute, I might add, until we actually get another candle to pop up. Then we can say, okay, that's our low. But as you can see, we're bouncing right at consolidation. You can see how many targets that we've already hit using an ATR value, how many targets we've already hit on a 15-minute chart. If we look at a 5-minute chart as an example, you can see it more closely, where we never filled the gap. We broke above our pre-market high. As soon as we do that and we stay above the pre-market high, we are trending bullish. And now we're coming back, right? We're coming back to do a retest. In the easiest way to look at this is as long as we stay really above, that pre-market high, we're trending bullish. Now, this trending label right here is actually just ADX. So you could Google that as well. ADX over 25 means that we have a trending market, but it doesn't necessarily mean that we're trending bullish or bearish. It just means that we have enough of an audience there to make something happen. Isn't that a great indicator to have if you're one of those people that are always stuck in chop, right? So you can then identify, oh, is ADX over 25? Now you could go right into Thinkorswim and get this indicator for free. It doesn't come as a label, it comes as an oscillator, but you can identify the levels and you can, of course, Google that. But anything over 25 is trending. And it doesn't mean that it's trending bullish, doesn't mean it's trending bearish, just that there's enough of a crowd to make something happen. That's when you want your money in the market, especially if you're using a trade vehicle like a call or a put. Now, the other thing too to take in consideration is that um, though we're trending, right, the market ebbs and flows. That's just typical. You could see that our market from the open, the momentum has been positive. As soon as we broke down below that zero line, then we are, right, decelerating basically. We're now underneath the 20, which to me is my favorite EMA to identify if we're trending bullish or bearish. Anything under is bearish. Anything over the 20 is bullish, right? We got some consolidation bands to show us where we've been consolidating. A break below this level means that we're going to go down further. And so I'm looking at a break of 583. We're really close to it right now. A break of 583, and we could come down and visit our pre-market high level. And then, oh my gosh, then it'll just be a washing machine reversed. Yesterday, or the day before, we broke below our pre-market low, did a little bit of a bounce, came back up, got back into our range. Is that what we're going to do today? I have no idea, but we'll soon find out. All right. So now that we're getting close to kind of the end of our segment, let me just put in Tesla and let's take a trade on Tesla. Oh, even the 5-minute on a daily looks good. Unfortunately, it's going to come up here and do a double top. Now, it's either going to do a double top or it's going to break the top, right? Make a higher high. So as far as a trend is concerned, you got at the open, you have your low, you have your high, you have a higher low. Are we going to make a higher high? We usually get on a 5-minute chart, by the way, if you're doing some day trades, you usually get like two of these moves, right? Two of these moves of low, high, higher low, higher high. So we could break this top right here, but we'll have to see. Momentum's looking a little shallow. I would like to see that kind of get some oomph here. But I like the trade as a continuation trade for next week. So as I look at an hourly, now remember on a weekly, basis, if you're just doing weekly type of income where you're just doing a couple trades, trying to make $300 to $500 a week, as an example, you want to look at the 15-minute and you want to look at the hourly chart. That can kind of give you a sense of where we're going short term. And to me, 3 to 5 days is short term. So with that in mind, you can see we're kind of at a topping pattern. You can see I'm a little I'm a little suspect here as I look at this. So our first hourly, we hit the pre-market high here, came back up, knocked on its door. We're going to knock on its door a third time. So I'm really actually looking for some continuation for Tesla for next week. Now, I don't know if it's going to just have enough momentum to keep on going, but if it does go sideways, a debit spread will handle that vehicle, that trade vehicle will handle that type of action so much better than just a long call. A long call, you really have to have diamond hands. You got to check on it. You got to make sure you automate your stop, etc. But when you have a debit spread, it's much easier to hold. So if you haven't tried this, I recommend it. Simulate everything before you actually do it for real. We do have some selling in the market, 643 over the entire market as I take a look at that, as we're hitting resistance, right? We still got a couple more minutes until mid-morning reversal. I'm still going to go for this. I'm going to take Tesla. I'm going to just take an at the money. Let's see here, 7 days out, right? November 7th. And I'm going to put this on vertical. And I'm going to take that 267.5 to 270 range. So I'm going to just do an at the money call debit spread on Tesla. It's a $1.08. So I'm going to take 5 of these, and then we're going to see how this trade plays out. Now, does my whole risk have to be the $500? No, I can easily say, and by the way, I typically do, at 50%. If I lose 50% of my debit spread, which is going to be about $250 with 5 contracts, then I'm out of this trade. If it hits a 50% profit, what I'm doing is I'm trimming my trade. So I'll take a couple off at 50. I'll take a couple off at 60. You get my drift. And maybe just have a couple towards the end of the week, or, as it's still progressing. Okay. So that's what I'm going to do for today. You are basically buying, the way this trade is constructed, you're buying a 267.5 call. And at the same time, which is nice that the platform just does this for you, and at the same time, you're selling a 270 call. So you really have a hedged position. That's what it allows you to kind of have those, diamond hands to be able to hold through sideways or no action, or even maybe just a little bit below, right? If it goes against you a little, it allows you to hold on to this trade much easier than it would if you had a long call. You would just lose all of your premium on a long call. So with that in mind, that's the trade that I'm going to be taking. Oh, I'm in the wrong account. Let me get out of that one. Hold on for just a second. Get into the right account. Let's try that again. All right, music to my ears.
It's always nice when you hear that, especially if it's like a limit order to get out of a trade. It's like, you know what? I made money on it.
Yes, automation. So yeah, if you don't know, I queen of automation here. Love automation on Thinkorswim, and we're just now getting our 0 DTE SPX trades hooked up to a trading bot. So that's pretty exciting too. If you want to check out more info, tradingmadesimple.org, and hopefully we'll see you soon.
All right, appreciate it. And I went ahead and put the link in the chat as well, so they're welcome to join you anytime. And thank you so much. We will see you next Friday.
We'll see you next Friday. Good luck, guys. Have a nice weekend.
All right, see ya. All right, we say bye to Sandra, and then now we're going to go ahead and trade some futures with Apex here in a moment. Let me go ahead and find the right branding. There's that. Awesome. Give me a thumbs up, Jesse, whenever you're ready to come on the show. All right, what is going on, brother? How you doing?
What's up, man? Doing well. How about yourself?
Good. How was everything when you went to go check up on your house?
Good, man. Nothing happened down there, thank God. Everything was nice, smooth, clean, no issues. So, at least we escaped that one. Praying a lot for everyone out on the West Coast there, towards that Tampa area that got hammered.
Yeah, it's quite unfortunate, but hopefully things are, especially when they get hit with back-to-back ones, it's never fun. Let me quickly just talk about what Apex is and how it kind of works. So Apex is a eval funding platform. It's what I personally use as well with my own money. No one gives me anything for free. And it's pretty much the way that it works is I have a $50,000 account, like